Are you more nervous about finding your next home or about what happens if your current home sells too fast? I've helped dozens of people sell and buy here in the Philly area, and this is hands down the biggest struggle that I see. So let's unpack exactly how to do this successfully. So today we're focusing on the smart strategies to buy a home before you actually sell. What can you actually do to make that a reality? And here's the big dilemma. You want to buy your next home, but you still need to sell your current property. So how do you actually sell and buy without getting stuck? That is without a doubt the biggest mistake and the biggest fear that a lot of people have and make. They get stuck, or they feel like they're going to get stuck paying two mortgages for 5 or 6 months, right? Doesn't ever really happen that way, but you never know. And I want you to be prepared. The way to do that is to utilize your home equity to buy first and then sell. That is the strategy. Buying first and then selling. Or is it selling first and then buying? That's exactly what we're going to be getting into. So the common pain points. You're unsure how to time the sale and purchase. And look, you are not alone. So many people go through this. There's so many people right now who want to buy. They have a home to sell and they're trying to time it perfectly. And I will say this because I've helped people do this and it's very challenging, is there is no perfect way to do it. It's only perfect for you. It has to make sense for you. Another common pain point is people are worried about juggling two mortgages. And look, sometimes that does actually happen. Sometimes you have to juggle two mortgages, but if you do it right, and if you have contingency plans in place, you do not have to juggle two mortgages. Another common pain point is people are afraid of selling too fast or missing out on your dream home. Well, what if I sell too fast and I'm looking at the market and I can't find what I want? But what if my dream home comes up and my property doesn't sell too fast, or it takes too slow and I don't get the offer I want, and we don't get this and this and this? Relax. We're going to cover all of that today in this video. And then the last common pain point is home equity can give you flexibility, but you have to be able to use it strategically and understand what is home equity. What do you do with it? How do you utilize it? That's everything that we're going to be covering right now. So what is home equity? This is a big question. And believe it or not, some people don't understand what home equity is, but essentially it is the current market value minus the remaining mortgage. So for example, if the value of your property today is $450,000 and your mortgage balance is $250,000, that means the equity is $200,000. So you think to yourself, wow, that's amazing. That $200,000 can help me cover my down payment. They can help me cover all the closing costs, or some of them. They can provide temporary housing or storage for my stuff just in case that we are in between. But that is the easiest way to look at home equity. It's the current market value minus the remaining mortgage. Your home equity, it changes constantly, right? It's not a static thing. And that has to do with market shifts, the repairs you put into it, and the sale price. Those are the three things that affect the equity in your home. So just because right now in this moment of time, if it's 450, you owe 250 and your equity is 200, it could be more a year from now. It could also be less a year from now. So guessing is leaving money on the table. And I highly suggest that you do not guess about how much you actually have in home equity. Consult a real estate professional, either a real estate agent, a real estate broker, or even a home appraiser to understand exactly how much you have. And if you think about this, when was the last time that you checked on your home equity? A lot of people don't always stay up to date with how much value is actually in their home. So make sure you do that before moving on. 3 ways to unlock your equity before you sell. This is the meat of the video. These are the 3 things that we're going to be talking about today. So number 1 is a HELOC, or a home equity line of credit. Number 2 is a bridge loan. And number 3 is a home equity loan. So you might be asking yourself, Sean, what is a HELOC? It is probably one of the more flexible options. It's a credit line that's tied to your home equity. I have a HELOC. I've utilized HELOCs before to purchase properties. And essentially, what you do is you borrow only what you need. It's kind of like a credit card of sorts, right? And you have to pay interest. The interest is high, but it's only on what you use. So say, for instance, you have a home and it's worth $500,000 and you owe $250,000. That means you have $250,000 of equity. A home equity line of credit will let you borrow against the equity in the property. But Sean, do I get all that money? No, you do not. They will lend you, the loan to value will be anywhere from 80% to 90%. 80% to 90%. So if it's $250,000 of total equity, a lender will give you up to 80 or up to 90%. Okay? Up to 80 or up to 90% of the $250,000 of equity. So that's what you have to work with. And this is perfect for utilizing it for the down payment on your next home, because down payments are the most expensive closing costs. You can make small improvements to your current home to boost the value of your home. So if you're not worried about coming up with the down payment, you could absolutely utilize this HELOC to improve your current home, to raise the value of the home, and then also to have non-contingent offers in the competitive markets like Media and Conshohocken and the Berwyns and Downingtowns and Westchester, right? All these areas are still very, very strong sellers markets. So that means that when you're in a strong sellers market, you don't want a contingent offer that's contingent on you selling the property. If you have the funds up front, you are going to be in a better position to buy, and you don't necessarily have to sell right away. The second option is a bridge loan, which is a short-term solution. So this is really designed for buying and selling at the same time. A bridge loan is a short-term loan, anywhere from 6 to 12 months, and it's secured by the current home equity that you have in your property, and it's paid off after you sell the property. So essentially, you can go to certain lenders who offer bridge loan products and say, hey, Mr. Lender, I have $250,000. Now they're going to do all of their due diligence. They're going to, check all the documentations and all that good stuff that you need. But essentially, you're going to go to them, and let's say you have $250,000. That bank is going to give you access to $250,000, right? That $250,000 of equity that you have. And they're going to say, here, utilize this to buy your next home. Utilize this for your down payment, for closing costs, and things like that. And that way you can make an offer, again, without it being contingent. And this is perfect for securing your next home without touching your current savings, right? So these are higher interest products. I will say that. So make sure you take that into account. And with everything, you always have to do your research to see if it's the right fit for you. Third up on the list is a home equity loan. It's the most predictable option. One of the most predictable options, I should say. It's a lump sum of cash up front. Now, I've utilized a home equity loan before. It's a fixed interest rates, and it sets payments over 5 to 15 years. So essentially, here's what happens. Say, let's take the same example. We have a $500,000 home. We have $250,000 of equity, and because we owe $250,000. So with a home equity loan, you're essentially taking out a separate mortgage, not a second. You're taking out a separate mortgage. So if your interest rate currently, let's just say your interest rate is 3%, and you do a home equity loan, right? Now it's going to be much higher, 6.5%, 7%, wherever interest rates are. So your rate's going to go up, but you're going to get a lump sum of cash once the refinance happens. So how this works is, again, it's going to be based on a loan to value ratio, which is either 80%, or in some cases it could be a little bit higher. So if you own a home and it's worth $500,000, but you only owe $250,000, your new payoff principal amount could be $400,000. Where the case is you collect the difference between $250,000 and $400,000 with some costs incurred as well. So let's just say we rounded up to about $140,000. That's cash, $140,000 cash in your pocket. Now the current home you own, now you owe $400,000 instead of the $250,000 that you owed before. And this is perfect for homeowners who know exactly how much they need, or they're potentially buying new construction with more firm deadlines. But that is a home equity loan. Now, the timing, right? Timing your buy and sell process. I know it's very challenging, but it can be done. And it has been done. And I've worked with many people who have done this. And these are the three main strategies to do it. I'm going to add a bonus one at the end. Number one is you buy first with the HELOC or with the bridge loan. Number two is you sell first and then you buy. And then number three is you have a same day close, which means you sell and you buy on the same exact day. Buy first with the HELOC or the bridge loan. Best for buyers who want flexibility. Again, you get that strong non-contingent offer. And it's very ideal in all the hot markets in this area. Your Medias, your Conshohockens, your Newtowns, right? All these areas that are still in strong seller's market. You may have a temporary overlap in payments, but look, once you do this, so once you're able to utilize the bridge loan, once you're able to utilize your HELOC, and then you buy the house, right? You're potentially going to have some overlap in payments depending on how long it takes to sell your current property and when it closes. Because if you don't know this, when you buy a home, say you buy it in January, your next payment might not be until, it generally won't be until a month or so after. So the actual payment won't come until around March. So there is some time between when you have to make your first payment on the new home. So that gives you a little bit more time, a little bit more flexibility to sell your current property. The second is to sell first and then buy. Look, this is great because you have no mortgage overlap. And then this is also great because you know exactly how much money you have. But you may need to rent before, you may need to stay with family. You may need to get short-term housing options after you sell. Because here's the thing, in this market, we're able to sell really fast, right? Selling is not the issue. It's finding and buying a home. That is the issue. So once you sell first, and here's another pro tip for you. Not a lot of people talk about this, but when you're selling, you can have included in the agreement of sale a suitable housing contingency. That means that you say to the buyer, hey, I'm willing to sell my house, but it's contingent upon me finding suitable housing. That means that I have to be able to find a house to buy within a certain time frame, whether it's 30, 60, 90 days. The buyer and the seller both agree on it. So everyone is in agreement, which is what you need in order to move forward. And this works best if you need proceeds to qualify to buy a home too. So this is a really good option. Selling first and then buying. In a perfect world, right? And we know it's not perfect and we know everyone's situation is different, but you could potentially stay with family, for as much as you can handle it. Or you could potentially stay at a short-term rental place like in Downeytown. There's AB. They have one in Malvern. They actually have them all over greater Philly area. This is an option, right? You can stay in short-term housing until you find a home to buy and then close on that. And then the third one is the same day close. This is what I have done the most with my clients. Is you sell in the morning and you buy in the afternoon, right? You get that maximum efficiency, only having to move once. And this really, really, really requires experienced agents, lenders, and a great title team, right? Because the timing must be flawless. And I will say this, generally something comes up between the transactions, okay? Generally something comes up. And this is why it makes sense to only work with experienced agents when you're doing this, because you really never know what's going to happen. And in my experience, there's always been some kind of issue. And it generally comes down to, this is my experience, is something with the lender. And it could either be your lender and maybe you're not getting the documents to the lender on time, or the buyer of the other, the buyer purchasing your home, right? So you're selling your home, and then you have the buyer buying your home. So they have to get their financing in place. And then you're buying your home. So you have to get your financing in place. So that means that your financing with your lender has to be on point, and then the buyer buying your home needs to be on point. And generally what happens is there's something in that lending process, because lending is such a pain in the butt. Let me be completely honest with you. So there's generally something that happens there that needs to be figured out. But, if you have to push settlement back, then you push settlement back. If you have to push settlement up, if everyone's in agreement, then you push settlement up, right? There will always be ways to work through it, but the same day close is the best option if it can be done, and it absolutely can be done. And that here is, in my opinion, one of the best options, and it is a rent back. So this is where you sell your home first, but you stay in it temporarily after closing. You rent it back from the buyer for a set period of time. It could be 30 days, 60 days, 90 days, 4 months, 6 months, whatever you agree on with the buyer. And this gives you time to find your next home without having to move twice. And it works best in the seller's market, where buyers are more flexible. And that's right now, right? Sellers have most of the control in the Philly area, right? So we know that. And the rent back option is great. And you have everything in agreement, always have everything in writing. We have certain documentation through the PAR, the Pennsylvania Association of Realtors, with this information, with certain documents that, allow you to rent back, and all the terms, everything's in there. Okay. And it's very, very important that you have everything in writing. But this is one of those unsung options that's out there for sellers. But here's the thing. None of this works if you're guessing at your numbers. If you don't know exactly how much equity you have and how much you can actually use, you could end up over leveraging yourself or leaving thousands on the table. But this is the strategy. This is how you buy and sell a home at the same time. So if you're a Philly area homeowner thinking about buying your next home and want to know exactly how much equity you have and which strategy makes the most sense for you and for your timeline, reach out to me. I would be happy to walk you through the process. All you got to do is click the link in the description and schedule an appointment with me. Look forward to speaking with you soon. Have a great day.